Good morning, everyone, and welcome to Nadex Morning Analysis. It is September 20th. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice, and we are going to look at some hot spots in the markets for the day. And we do have quite a few things going on, but before we get over there, I need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And finally, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. What do we have going on this morning? And it really is all around risk. We're in a risk-off situation. The Evergrande situation in China, if you're not familiar. Oh, you know what? I wanted to bring up a chart. I just need to. There we go. The Evergrande situation. They're calling it another Lehman-like situation where there are some problems going on. Uh, this is a large company out of China. It's a huge real estate company. They've got massive amounts of debt, and it looks like the Chinese government may let them fail. And with that, there's a lot of concerns. Plus, we're in that time of the year. We're seasonally. People talk about this time of the year where the market tends to behave the poorest. We tend to see the most volatility. And so there are concerns that people are seeing some things that they've seen in the past and they're expecting it to happen again. And so we're seeing the markets sell off. What are we going to look at? One, we're going to look at oil, because oil is it actually just traded below $70 a barrel, and it's hovering in that. It did bounce a little bit, but it did get below 70 for a little period of time. We're seeing strength in the U.S. dollar a bit, but with oil down and with a little bit of strength in the U.S. dollar, the U.S. dollar CAD is absolutely taking off. We're going to take a look at that. And then, of course, I think what we're going to spend most of our time in today, which is probably what everyone wants to talk about, are the equities, because the equity markets are looking to open down around 2%. That's a pretty significant move. I think China was down 3.5%. So could we see more of a washout on the heels of that potentially? So with that, Brian, I'm going to flip it over to you. We'll talk about what's going on with Evergrande, uh, how that's impacting oil and any risk assets for that matter. We'll take a look at people maybe taking a little bit of flight to safety to the dollar, and then equities. It's a risk-off environment. People are just trying to step out of the way for the moment.
Yeah, I mean, obviously it's big news. It's the hottest news that we have right now, so that's what every single person is focusing on. But if you look deeper into it, and again, every time we get some type of a story on this level, you need to kind of look a little bit deeper and see what other people are saying. There's a couple articles. I mean, we're talking about here, the world share skittish, China Evergrande contagion, is there. Here's two simple articles. Here's one. It's an opinion article in China Macroeconomy that says China's Evergrande is not Lehman. It's not a Lehman Brothers moment, but its fate spells trouble for long-term growth. Chinese authorities will not directly bail out the embattled property, but they will be keen to prevent a complete collapse. Beijing is likely to use a cocktail of proven tricks, rollover debt, haircuts on assets, and emergency payments to be vulnerable. Another one by LPL Research basically says the same thing, why Evergrande isn't the next Lehman Brothers. And if you guys want to, there's plenty of ways that you guys are able to go research these, read them yourself. And again, they make some very, very valid points, and I think that there should be more credence probably put into this. But the initial gut reaction is everything just kind of rolling and heading back to the downside. Now, interestingly enough, the dollar is actually not that strong. The dollar is up 0.13%. It obviously had a big rise, but most of this rise was actually last week on Friday.
Right.
Right now, it's kind of becoming more tempered, but now everybody knows about the story and the prices already moved. So one of the biggest things that you need to worry about with markets is by the time you hear the news, has the market already reacted to it is the question that you need to ask. Dollar is pushing very, very high. And understand, the dollar is a flight to safety as well as the Swiss, as well and to some extent as the yen. The yen is actually the strongest currency pair out right now. And the reason why, and the way that you can figure that out is if you look at all the currency pairs, and these are the majors, the biggest mover is not the CAD. The biggest mover is actually the pound yen, down 137 pips in 24 hours. That's over the ATR. And again, we talked about this, how it kind of compressed and got smaller and smaller and smaller. We're down at that 90 pip mark. Well, this is what it does on a day that there are news. It has the ability to jump 140, and it's still got a half a day to go. So that's big. As well as you can see, dollar Swiss is also in the red, showing that the Swiss is stronger than the dollar. And dollar pound is, dollar yen is also down 31. Looking at charts, I also know that the Aussie yen is also down 0.9%. Dollar CAD is up. It's up 0.62. So it's not the biggest, but it is on the larger side. But all the yen pairs are driving straight down. So it is the big market mover. Now, where the dollar is, remember, we don't directly trade the dollar index. We do have a higher time frame zone, just a little bit higher, but we're already starting to see a failure to go higher type scenario. You may say, well, wait, don't we want strong dollar? Isn't this the perfect time? No, because if we have strong dollar, other people around the world will not buy or use American services. It's actually bad for our currency to be higher as far as the stock market goes. The dollar CAD obviously is one that we got to mention. The dollar CAD is already starting to roll back again. It may be profit taking, but at the same time, this story is kind of the dollar CAD is going to be the most complicated to play today. The reason why is one, obviously the Evergrade oil collapsing, right? But also today's the Canadian election. So today is the election, the snap election.
That just amplifies things, right?
Right. So I would be very cautious with this one as it kind of flip flops back and forth. Again, right now nobody knows what it's going to be. The polls basically had the two main contenders even, but the two main contenders, the Conservatives and the Liberal Party, neither of them will be able to have a majority government without the third, the NDP on the right-hand side. Remember, they have a multiple party system. There's three big ones, but there's multiple parties that are involved in the scenario. So it's a little bit different. And some of the populations that are most affected up there have been very vocal in speaking out. And it's basically I think it's going to be an interesting turnout. We'll see. Remember, polls are not always right. The polls for the last couple elections have not necessarily been accurate. There's been some major surprises. Things like Brexit, things like the Hillary, the Trump election, the Venezuelan election. These were all polls that had it one-sided and were completely wrong. So remember, you gotta realize poll data is not always the best. But anyway, the other side of this equation is obviously going to be energies and oil. Oil is down again, seeing a pop. It's down 1.7%. But remember, we talked last week about that $70 level. You can see here we had one touch, two touches. We just actually came in with a hard touch, and you can see it is rallying pretty strong off that level. At this point, we're probably already over a 1 to 3 move. And
look at it, just keeps, and it's just right now you're seeing a recovery in oil.
It's over 1 to 3.
I mean, some of these shorter duration binary options get kind of interesting as oil's moving around.
Yeah, and guys, this is why it's important. I mean, this is a level, when we look back, we knew we had a bit of a collapse going into the weekend. And what we've seen in the past is, I mean, the last time price was here, it had a pretty nice movement both times. The other thing is, again, the U.S. economy is kind of controlled and kind of, has some influence. Remember, we use a lot of oil here, right? Demand and everything is basically being written off of what the United States wants for oil and kind of the future as far as oil goes. We've seen this scenario a lot of times, right? Weak dollar, U.S. steps in, strong dollar. Weak oil, U.S. traders start coming online, strong. Again, there are many American companies that make a lot of money off of oil. So you're seeing
we all use it. We all use it. So I mean, we don't know if oil's bottomed out. That is the bottom. Again, it's 70, but it certainly tested it, and it's seeing some pretty strong strength.
Again, we're up 75 cents in 30 minutes. That's a big move.
Now, with I mean, how does that? With the Canadian dollar. I mean, obviously the dollar looking a little stronger. Canada's got this. Canada does move. The Canadian dollar does move with oil. Are we going to see a corresponding move here?
Yeah, I would say that's probably in order. I mean, there are some levels up here where there are sellers, probably a little bit of profit taking from this burst. But again, the price of oil going higher strengthens the CAD. We looked at the dollar index. We realized that, hey, listen, we had a top put in, and then we had a failure to go higher, and that's a decent candle. I like that one as well as this higher. So again, it's showing that the dollar is weakening, oil is strengthening, and then if you look at the dollar CAD, we also know that, again, there's a level here. So
starting to roll over.
This red candle is indicative of what you're seeing in the other two. So, it's interesting. We have one is a futures, or an index on the dollar. We have one that's a commodity, and yet here's over here, this is a currency, and what is it showing you? It's matching the other two scenarios. So they're all puzzle pieces in the same story. I think all those are important, but again, a lot of people are going to be looking at the indices today. I would say that they're kind of probably in the same scenario, right?
And these charts are pretty ugly right now, I have to admit.
Yeah, and they should be. I mean, right now, all it is after hours traders, and the big question is, are they positioning for kind of a rally today? I mean, remember, this is, a Chinese company. It's big, but is the world going to collapse on it? I mean, did the world disappear with Lehman Brothers? No. I mean, remember, Lehman Brothers was allowed to die because it wasn't too big to fail. There's multiple articles talking about how they're not going to let it collapse. They're going to be sneaky and kind of control it, and maybe the Chinese government will take it over. I mean, there's a lot of things out there. They are cracking down on the private sector a little bit more, which is okay. It's not bad, but the question is really, what does that do to our overall economy? Does it really change much that's happening here in the United States? Remember, the United States kind of does this with world affairs. It's big. People hear Lehman and they immediately start selling. But at the end of the day, was there any positives today? Yeah, we saw Pfizer talk about how all their data and ducks are in line to go for the 5 to 12-year-old and kids. They've lowered the dosage and found kind of a sweet spot for it. And the FDA panel, whatever, says they expect to receive all the data in the next 2 to 3 weeks. So there's one positive that people have been asking for. So,
I got a question for you.
Yeah.
So, here, I'm just going to bring this up for a second. We do see, it's obviously a very ugly chart on what this is, the S&P. It looks like people are, again, just like we found in oil, and there was it bottomed out and it bounced. Just like the Canadian dollar, it topped out, it started to roll over. Here we're starting to see people starting to step in and buyers looking to buy, step in. I don't know if this is people just taking some profits. What do you think on is there a chance we see a little bit of a bounce here, and then when the open actually happens, see all those retail traders come in and actually just follow up with, hey, I gotta sell. They're panicking right now.
Yeah, and that's waiting. Probably
right.
I would say watch out for that. Retail traders are going to be like, oh my God, it's down. The Russell's down 2.5%. YM's down 2%. They're going to see these big red numbers. And again, if you look across the board, a lot of things are red. What's not red is gold and silver, right? Pretty much all the currencies are red. Bitcoin, Ethereum, AMC, GME, all red. Dogecoin down 10%. Natural gas, of course, natural gas is green, right? It's to the top side. And TLT right now, it's considered delayed. It's marked as a red, but it's gapping higher, although it's gapping into an area. Again, bonds, when equities are bad, when it's risk off, bonds tend to spike. And what's interesting, where they are trading right now, they're actually sitting up here inside of a level. So even bonds right now are approaching a level where sellers have kind of hit. So it's kind of one of the scenarios where a lot of things like, yes, the initial reaction is in, except obviously natural gas is not moving. It's actually green. Meanwhile, oil's down too. So it's one of those things. You're seeing kind of areas where there is a reversal. And again, one of the most popular times or best opportunities to trade is at session open. That's in the next 30 minutes. U.S. traders coming online, they're going to see all this and try to follow. It's like, oh, if it's red, that means we sell.
And they're just going to come in. Right. So you might see this. You might see everything's rolling over a little bit right now as people are taking some of their risk off, or maybe even taking some profits from the European session. And when the retail trader comes in, you might see all of these things go back and extend. You might see the equities go lower. You might see the dollar go higher. You might see oil go lower again, just as these retail traders who are just, who haven't had an opportunity to really do a whole lot, kind of finally puke their position to get that final washout before you see everything kind of roll over again.
Yeah. And here's again, I don't use many indicators, but there are ones that I do like to use. One of them is a Bollinger Band. If you guys don't know what Bollinger Bands are, they're basically taking a statistical kind of look at where prices should move based off of a moving average. And again, I'm very big into statistics. You can see here's the VIX, and the VIX is a volatility index, guys. Look at this. It was riding the high side anyway, starting to expand and then jumped and just completely blew it out of the water. And it's having to catch up very, very fast. But look how this expanded out. Remember, things like statistics are, again, stacking the odds in your favor. You can see that the last time we had such a huge explosion was what we had in the VIX over here. And what did it do? This is an hourly chart. It blew through, it went high, and then immediately reverted right back to the mean. Well, guess what we just did right here? We're at that high. We start to revert back. Yeah. Boom, it reverts back to the mean. And for it to revert back to the mean, that means we need to have less volatility in the market, which means what? The risk and the fear is not there. The only way to have less risk and less fear in the indices is for them to turn and do the same thing and start to go back to the top side. So the question is, like the NQ, perfect example. We're really close. We're at 15,070. If we were to go down in the next 20, 30 minutes and we start going around here flirting with this, we could actually put it in one of those reverse kind of Harry Potters, a failure to go lower scenario. where we do something like this, we have an established risk level. And again, I don't know what the basing is going to look like yet. We're a little bit early. But what if it does one of these things and that becomes all of a sudden our takeoff and we end up closing green on the day? Is it possible? Sure. Sure,
Right.
anything's possible. But the biggest thing is where do we find those bottoms? Look for these large psychological levels. 15,000 is a big psychological level, you know? So, yeah, there's a lot out there. And again, ES is kind of the same thing. It's everything is in an extreme range right now. And a lot of times, what statistics shows us and what you see time and time and time again, doesn't matter what chart you look at, when you have these moves, they're exponentially larger than what are supposed to happen. They tend to retrace and bring themselves back again. So that's what I'd be looking for today. Look for some great reversal opportunities. Caution with the dollar CAD. Again, that election, geopolitical events is one of those things that, again, war and elections are things that you tend not to want to mess with. And we won't really get any data for that till tomorrow. But on the news front, don't forget, later on tonight, we have monetary policy meeting notes for Australia. Australia is directly linked to China. Reason why is as China expands and growth is big, they buy natural resources from Australia. So Australia right now is kind of holding firm as everybody waits and sees, but their data has been good. It's forecast to be good this week. Look for potential trades tonight at 9:30 p.m. tonight.
So perfect. There is a lot going on today, clearly, and there is opportunity. Be careful and trade carefully on that open, as we might see when retail traders come in, extend some of these moves that you've seen before. But again, there are pretty dramatic moves, and not sure they're wholly warranted, but the market will do what the market wants to do. As a reminder, by the way, tomorrow is the boot camp on trading commodities. So we've talked quite a bit about oil and energies and precious metals. Remember, Brian is going to be kicking that off, and he's going to be doing something special. So if you want the opportunity for what he's going to be doing, please register for that. Don't forget that's tomorrow, and he will be the first
At 11.
session. Yeah,
Yeah,
there
at
we
11
go.
a.m., not 12 a.m. tomorrow.
So, and with that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can email Brian at support@keeptradingsimple.com. We will be back tomorrow morning, but then we've got the boot camp all day tomorrow, so please join us for that. Again, a quick little recap. We've got some disruptions in the markets, some current concerns. We are going into a volatile time of the year. We have traditionally seen moves like this. We saw oil washing out. It started to put in a bottom around $70 a barrel. We'll see what happens when the retail trader gets in. We've clearly got some things going on with the US Canadian dollar, but Forex market is actually pretty hot right now, with the yen being the strongest currency, seeming to be the flight to currency. And then lastly, equities, we're seeing 2% lower, but there is going to be opportunity in these markets. Thanks for joining, everyone. We will catch you again tomorrow morning, and good luck in the markets.